Hello, hello everyone. Am I audible? Can everybody hear me? Okay, thanks. So, welcome to the Sabancı University International Sabancı University Open 2021 Tournaments Workshop Series. So, and remember, this tournament will be take place in 8th and 9th of May, and the registration deadlines are April 30th. So. And we have a wonderful CA team, and we will hold workshops with each of our CS, hopefully. So today we have Lovro, whom we are very thankful for participating in our tournament, becoming CA. Lovro is, aside from his outstanding positions as a CA and chair for important tournaments and debates, he also has many achievements as a speaker. Some of his memorable championships are Athens EUDC, Oxford ESL 2018, Athens Pre-EUDC Open, Central European Cyberspace Open, and LSE 2021, and many others. So thank you, Laura, for this workshop, and thank you for attending, and the floor is yours.
Okay, thank you very much for having me, and thank you to everyone who came and wants to talk about economics, the best motion, right? Maybe for some, for me, I think definitely. So basically how I structured this workshop is I made a list of motions that were set more or less during the last year, so during the online era of debating, which I think you should be accessing right now through the chat. So I checked beforehand that I made the privacy correct, so you should be able to see this. But there's a list of like 80, 90 motions, and that all are connected to the economics. And basically, from that, I extrapolated a couple of trends. So there are some themes, some motion types, some topics that occur more often than the other ones, and these are the ones which we're gonna be talking about how to frame at this time. So basically, there are a couple of like areas that I'm gonna discuss. I think the first one will be bailouts, debt relief general, and how this is, what are the motions, and how this is done in debating. In terms of structure, I'll give a quasi lecture, but it's going to be like a lot of examples, not that much theory. This is all going to be practice. So when you enter the round, here's a framing that you can have, try it out, see if other people do it to you, how you can respond to this, and all of this. So it's not going to be like, here are 5 ways how we can do an argument. Although these workshops are also useful, but I think these are practically something which is more, which is better for people. And then in the end, depending on how much time we have, we're going to have a Q&A session, so you can ask questions. Given that there's a fair amount of you, which is good, thank you again. I might not be able to answer all of the questions because the allotted time is 1.5 hours, I think, tops. So if there's something which is unanswered, of course, send me a message on Facebook or on Discord or wherever you find me, and I'll try to respond as soon as possible, right? So we can continue the chat there as well. Okay, any questions with regards to how this is going to work, or something you want to say before we begin? Okay, great. So let's start with the first set of motions. So basically, if you take a look at the Excel sheet that I sent you, and you Google bail, and you like search, so Control F for those of you with like Windows. I don't know what's it like on Mac, but like Control F, and you can see that there, if you type in bailouts or if you type in debt, you're gonna find some of these motions. But I'm gonna read it out for you just so you get a grasp of what are we talking about here. So for example, this house would use bail-in to rescue companies suffering due to COVID pandemic as opposed to bailouts. This house believes that the Argentinian government should have rejected the 2018 IMF bailout and sought to negotiate further concessions, even at the risk of not receiving a bailout. And this house believes that the provisions of loans in times of economic crisis by global institutions like the IMF should not be conditioned on some collateral or meeting some sort of structural readjustments of the economy or fiscal austerity, etc., etc. Or the idea that IMF should significantly relax conditions on loans to African countries, or that this house would cancel all debts to international organizations or the countries held by governments of the poorest 20% of countries. So basically, you get the gist. It's about bailouts. Mostly, it is about international organizations versus different countries, or countries versus different actors in the process. Some of them are probably internal in terms of, COVID, and then whether you should bail in, bail out, and what should be the conditions of these bailouts. But we'll focus mostly on the international bailouts here. So you'll notice that from the 90 motions, I think, that are on the sheet, there are 10 motions here. So a very good percentage of how often people said these motions, especially recently. So what are the potential frames, or what are some of the things that I see people missing in these motions and that could earn them a lot of speaks and wins and just generally good performance in these type of debates? So first of all, almost no one frames what happens when a country defaults. And this is one of the basic, initial positions when you are considering what these motions are about. So basically, people think, oh yeah, the potential in this debate is that the country is going to default. That's it. No impacting, no setting up the structure, how this happens, what happens beforehand. Is this a good thing? Is this a terrible thing? Is this a catastrophic thing? Etc., etc. So I think the first position, or the first general thought in these type of debates, is to frame, especially if you're doing this from a position that you want to argue, or that you frame the debate that this is going to increase the likelihood of countries defaulting, what happens actually when a country defaults. And obviously, this is not a process which happens like from Monday to Tuesday. So there's going to be a time period where there's going to be big instability, where people are going to speculate whether the country is going to be able to meet its demands, whether it's going to be able to negotiate with some private investors, or the IMF, or the World Bank, or whoever might help them. It might be a different country as well that is willing to, help them pass through the period of like insolvency. But generally, this period is characterized by huge shocks to the economy and by huge uncertainty. Now, the uncertainty obviously isn't good for the economy. I don't want to go too much into that because I think a lot of you are familiar with this. But think about it from the perspective, if you are someone who is owning a business, or from the perspective of someone who wants to maybe start a business, or from someone who wants to change a job. You're not that satisfied, you think you can have a higher wage. The uncertainty in the general economy does a lot to pause all of these things. You're not going to open a new company if you think that the situation is very uncertain and you don't know what's going to happen with the government, or what's going to happen with pensions and the paychecks that the government pays in the public sector. You're not going to start new projects if this is something that is going to happen. You're going to be probably wary of cooperating with international partners, or they are going to be wary of cooperating with you if they know that there's a potential for your country to basically default. Now, these are some of the arguments which relate to the idea of how this affects the business climate in the country and why this is bad from that perspective. But there are also just more plainer arguments, which sometimes people don't run. And these are that, your country is going to be very late before the process of actually defaulting, when there are struggles with paying its dues, meaning that they are probably going to be late with paying some of their like suppliers, such as in a lot of cases medical equipment or medicines. This means that the supply is going to be somewhat not effective, or not as it should be. They're going to be late probably in paying pensions to people, in paying paychecks. These are all of the things where there's a big problem, that people are just not going to have the income that they are used to, and that they need to do like everyday's activities. So it's important generally in all of debates, and this is my experience with economic debates. Oftentimes people know that there is a concept, or that there is an argument, or there is a frame which works in terms of how we perceive the economic the economics and scientifically, and in terms of, this is something which is accepted in the economic community. This is something you would get taught in the university. The problem becomes when you fail to take the arguments which you prove and then prove that they have an effect on everyday lives of peoples, and not just in the abstract of economic thought. So in the same way, the argument about how the state defaults is a really bad thing should be brought down to the individual level. And you need to paint the picture to the panel, or you need to paint the picture to the opposing teams, or what it means when your paycheck is late, when you don't know whether you're going to get your paycheck, when there are talks that it's going to get drastically reduced because the state doesn't have money. What this does to people, how it changes their perception and like spending habits, but also how this harms their ability to go on about their daily tasks, how this reduces the productiveness of their job in the end, right? So all of these things are, I think, better ways of characterizing this. So this is the first frame that we can do in these type of motions. The second frame, and this is something which oftentimes people don't do or don't want to talk about because there's negative connotations to this, and oftentimes people just want to portray these like institutional or private investors as someone who is necessarily bad, giving out loans with high interest rates to countries that are not that developed, and why are you doing this? Bad. But if you look at it, the majority of the debt in the world of countries is held by private investors. They are the ones who provide the capital for people to have any sort of loans or the possibility to get themselves indebted as a country. Sure, there is a percentage that is done by the IMF, sometimes the World Bank as well, other partners, but the majority of this is like big private investors or big capital that is aggregated in different ways, whether it's pensions from people, whether it's savings, whether it's just like some sort of investment capital that firms might actually also contribute to. But it's generally this type of capital is what drives this whole process. And when countries go in international markets and then they want to take on debt, for example, billion US dollars, then there are different people on there, different like there are exchange or not exchange, but like trade markets where you can go, where you can list all the details about your country and what you are looking for, and then private investors are going to offer you a different rate. They're probably going to offer you some other conditions as well, and then you can choose which one is the most affordable for you, right? Why am I saying this? Because oftentimes people don't even consider what the impact would be at private investors, right? And how they would react if this were to become a thing. So a thing which I want to use to paint why this is important, for example, is a debate that also happened recently. So some of these motions are also going to be repeated, like was the case yesterday with the Econ Open, where some of you may be debated or judged or participate in another way. And there was a motion about whether the IMF or the World Bank should offer some sort of financial assistance to countries where there is a lot of Chinese influence, so the BRI initiative mainly. And so this is a good example for the frame that I'm trying to introduce. And this is that all of the decisions by IMF, by World Bank, also influence private investors. So if the IMF or if the World Bank says, we're not going to ask for collateral, or we are not going to ask you to do any sort of structural reforms in terms of making your finances more sustainable, or we are not going to help you if you take on, or if you took on, this is also a big amount of cases, if you took on a lot of debt from China beforehand, people who are holding that debt have a perception that this debt is less safe, right? Because IMF or the World Bank or like these last resort people who otherwise help countries when they are on the way to defaulting now have less confidence in you, which means that rating agencies, but also in terms of perception, just people trust these governments and countries less. And this is problematic because when someone trusts you less in the financial world, this means that you are getting worse terms in terms of that your interest rate is something which goes up. So you have to pay more in interest as a proportion of your budget and GDP. But also because you just can't get things. Yeah, people do not want to cooperate with you because they think that you are too unreliable, that you're not going to pay off the debt, and that there's going to be problems here. So as a general framing and how this interacts and how you can package this in a big argument, in you can how oftentimes debaters say this is the most important thing in the debate. Yes, but it needs to be the most important thing in debate for you to be able to capitalize on this and make it effective rhetorically for the panel, and then the panel is like, yeah, I'm voting for them. So basically, how you can package this is the idea that what we basically want for all countries is to never have to ask for any sort of help outside, right? We want them to be stable, to be able to take on loans on their own, to be good partners, to have very low interest. Example, Germany, which has very low interest because they are often running a primary, like a sufficit of their budget, and like they are very good in terms of finances. So anything that restores the confidence of the private sector as fast as possible in terms of, okay, now that you are done with us, with the IMF relief or with the World Bank relief or the assistance programs arrangements, you are back on track to getting private capital and functioning like a normal country would do, is beneficial in the long term, because it actually makes countries go on their normal ways of taking out loans, repaying them, without this added uncertainty, instability, and problems associated with when you cannot do this and then you need to ask for help, right? So if you tie the previous argument, which you said this sometimes is hurtful to private investors if you do it in this way, with the argument of this is our end goal, that countries become not dependent on the need to be helped by IMF. Case in point can be Argentina, which has like cyclical debt problems and then is oftentimes in arrangements or like near defaults or in defaults, and then this is a really, really problematic vicious circle from the perspective of economic stability and the confidence that you can put in your economy. And this is oftentimes a very important thing, I think, in terms of how people react to this. Okay, I think I'll have one more point here, and then we can move on to other areas. And this is that the willingness of rescue and bailouts is something which is also important here, because you will recognize that both the IMF and the World Bank are financed usually by countries. And these countries, of course, have an interest on one hand to finance international organizations that bring about stability, international corporations. Oftentimes, these organizations also harmonize a lot of things, or they just act as a soft policeman, I would say. So they're going to, look unfavorably and spread unfavorable news on countries that are deviating from international norms. So the norm currently is that, we kind of like free trade, we support it. Even the countries that are on a political spectrum, somewhat authoritarian or undemocratic, almost all of them have accepted free and open trade between countries as something which benefits all markets, all peoples, and basically leads to a higher standard of living for everyone on the planet. So if there's a country which says, no, we're going to go towards the direction of getting more and more closed from the rest of the world, obviously this is a mechanism in which you can isolate them or which you can incentivize them to rethink their decisions. On the other hand, there's a limit to what extent you are ready to finance and to give capital to international organizations. And now, as everything in economic debates and generally debate, maybe in real life, it's about balance, right? And you can say that in the time when it is very easy and when countries don't have a lot of consequence when they are actually getting rescued or bailed out before defaulting, the problem becomes that people who are giving capital to these international institutions, and these are largely richer countries, countries such as the United States, some in Western Europe, more recently also in an increasing trend, China, which is also becoming more and more rich and powerful as an economy, are not incentivized to give this capital if, on the other hand, they think or they have political pressures domestically or elsewhere that this capital is something which is given off to countries who are irresponsible, who do not handle their public and finances well. I don't want to go into a lot of details because there's a lot of you here. The audience, I think, is more international than that. But just one brief example from European Union, because it's fairly famous, is that this is exactly what happened when the European Union was trying to bail out Greece. And you had big political pressures, mainly in Germany, to stop this, to not give them money. I don't want to go into how right or wrong these people were and what later they turned into. But it is factually correct that bailouts are very problematic politically when they happen under the pretext and under the perception that you are not making people pay for their mistakes and that they are going to get away, that their debt is just going to be cut and they are not going to change, right? This is problematic. And if you can frame the debate in this way, then obviously this suits one side of the debates more. It's the side that is against relaxing a lot of these conditions. But you can say that in the long term, you are significantly decreasing the amount of loans and debt relief that is available if you make the conditions very lax, because countries are not going to be willing to provide the capital for these type of bailouts in the long run, right? So something which is beneficial because it probably engages with the best metric from the other side, which is going to claim we have just more opportunity for these countries to get rid of some bad debt, or like this debt might be unfairly acquired, blah, blah, blah. So all these things are valid and true, but this framing responds very well to them because it shows that in the long term, we're going to lose a significant amount of possibility to help some of the future countries which are going to run into problems, right? Okay, so this is the first part, or the first, I would say, set of motions that I've identified and that are very, very prevalent recently. So now I want to talk about the second set, which is basically motions about developing countries. And here, there's maybe even more of them, around 8. So in the same way, you can, for those of you who maybe joined recently, in the chat, there is a Google Excel document, and on it you can basically see recently set economic motions, and you can Google developing, and you can search developing, and it is basically going to give you motions that we are going to talk about. But as last time, I'm also going to reiterate so that just that we have a grasp of what we are talking about. So, for example, this house believes that developing countries should deploy protectionist policies to protect low-wage workers. This house believes that developing countries should prioritize investment in future technologies, e.g. 5G, cybersecurity, green energy, or traditional sectors. Developing countries should prioritize the massive construction of infrastructure over the direct provision of high subsidies and social welfare. That they should prohibit the sale of arable land to foreign states and corporations. That they should acquire on the open market large stakes in major publicly traded global corporations, example being Google, JP Morgan, Shell, and Pfizer. Oh man, this was WDC final in Thailand. So 2000, no, it wasn't the final, but it was a motion there, I think quarterfinal. So that was 2019 to 2020. If they bought Pfizer, then they would be in a good position. No, I think, just as a side note. Or that they should, the developing countries should oppose the automation of labor, or that as an industrial and developing country, this house would impose capital controls and trade tariffs on its economy. So I'm not going to dwell on this anymore. Take a look at this. You probably have seen, experienced these motions, so know what I'm talking about. So what are the frames that we can run here, and how are they useful? The first frame is that I can guarantee you that in 80, maybe even 90% of these debates, the debate happens in a reverse way of how it logically should happen. So people see a motion, they come up with arguments that suit their side of the house, and then they tie this to developing, right? So I don't know, if the motion is capital controls, they see capital controls. So if you're imposing capital controls and trade tariffs, this is going to lead to more stability of our currency, or this is going to lead to less impact of foreign flows of capital on our economy. This is going to lead to a more protected domestic industries. So these are the arguments that people have, and then they are going to connect them in the end to the development goals, or what development means for developing countries. How do you achieve development? What are the most important things? Of course, this is natural, but this also means that we have an opportunity, that we have a window to win the debate, or largely to make the debate more favorable for us in this sort of scenarios. If you do the opposite approach, if you firstly characterize what these countries should and shouldn't do, or what are some of the goals that are going to lead to more development. So, for example, some of the broad things that we're going to talk about here as well is, for example, you can say these states should or should not reduce the influence of state on the economy, given, and then you can argue why I think this is the case. They should prioritize getting more investments from foreign countries. Okay, they should prioritize exports. Okay, but you see what we are doing here. We're basically getting something which we are sure is going to lead to more development and to basically developing these economies, and then we are seeing, okay, the motion fits into this framework in this or that way. So this approach is better because it leads to judges and panelists and other teams having more trust in that you are not arguing that just because it was your motion, but that you're actually taking into account what are the actual developmental goals and ways in which these countries can develop. Obviously, these motions are very diverse when it comes to different countries, and not all countries are the same. Even here, if we would categorize them into some of the categories that World Bank has for like countries that are developing or low-income countries, there are still differences in the structure of this economy, with whom they trade, who are their partners, what is the employment structure here, what is the demographic structure here, are there any type of other things which are hampering economic growth. So in some countries you have relative political stability, in some countries you might have clashes or instability, or in some cases even civil uprisings, or like a very authoritarian government. So these are all the things which are individual, but of course when a motion asks us to generalize, we will generalize to some extent, and then look at common denominators for all of these places. So this is the first intro. So try to present and frame the debate as, here is what these countries generally need, here is how the motion ties into that, as opposed to, here is what this motion generally brings, here is how we're going to tie it to what these countries need, right? It's, in the end, it might seem trivial, but it's a big fundamental difference to how you're going to understand the case and how others will as well. So what are some of the concrete frames that we have here? First of all, the state influence on the economy. A lot of these countries, a lot of these motions, ask you to increase the state control of a part of the economy, whether it's to limit the amount of foreign influence or foreign challenges that you're going to get, or whether it is to basically forbidding something, or to keeping the monopoly inside of the country. Now, obviously, the frame that you can do here is that this is not ideal because it stops international competition from coming in. Then you can have examples of like a lot of different sectors, from telecommunications to travel, usually things where international competition, when it comes in, leads to a decrease of prices and probably a betterment of condition to some extent. The mechanism is very easy. If you are coming into the market and you provide a worse service or like higher price product, you're not going to make it, right? So you need to some extent to be cheaper or to cover areas which previously were not covered, or to introduce some sort of added quality or customer relations bonus in order to, get a part of the market segment. So this is why there are incentives when you allow these things to have a better option for the consumers in the end. But also in general, this is something which happens on a grave problem, is that, again, we are generalizing here, but this is what the motion asks us to, is that, how you're going to hear teams oftentimes arguing, there's a lot of corruption, the public system is not efficient, there's too much bureaucracy, there is political instability when they talk about developing countries. Well, it's easy, and people always identify what the problem is, right? They say this is not good, you can't do anything because these countries are very corrupt, and the money never comes to the people who need it, but it always comes to dirty, corrupt leaders, right? This is the argument how it often goes. I say you harness this negative energy that oftentimes happens in these debates, and you turn it into a positive energy. You provide a solution to a part of this problem, and you say that every time there's an increase of state control in these countries, it is likely to favor a certain political party or political interest, or sometimes in some cases where this is applicable, maybe some ethnic interest, majoritarian interest, religious interest, because in the end, the state is inherently a politicized actor. It acts on the basis of winning power, providing favors to people who helped you won power, and maintaining power. On contrary to that, people, of course, in these countries, in a lot of other countries as well, there's going to be some sort of connection between the private sector and the state as well, through tenders or just like things where people apply to provide government services and goods. This is the gray area. But the more you reduce the influence of government in the economy, and the more you allow private competition, whether it's international or national, the more you basically remove these barriers for people to doing business in your country, the less this political influence is. And now, the thing is that all you have to do is, again, argue the balance. And this is how you put this frame into the real world. Because obviously what the other side is going to throw at you is going to say, look, but government intervention is sometimes good. It leads to less inequality. It leads to removing market inefficiencies. In this case, it might be able to protect some very important national resources like the arable land or potentially mining sites or just like some resources that we have. So how do you approach this from a framing perspective? You just talk about why a less interventionist measure is a one which also fulfills this to some extent. So you do not have to ban foreign enterprises into coming to the country and starting a business in terms of mining or else, or buying arable land, or what else were the example? Going in, forbidding foreign MNCs subsidizing in a lot way, like your domestic products, etc., etc. You can say it is enough for the government that they tax these businesses, or that they put regulation in place where some use of arable land is going to be limited for foreign companies, right? So again, you are pushing the burden on the opposing side to explain why this ultimate biggest infringement of government into the economy or state influence is needed. And the word that you're looking for here, or that we are looking for here, is proportional to the impacts that they are trying to achieve, right? So this is one way in which you can frame these debates. And oftentimes, if you do it in this way, if you are nuanced in these regards, teams are going to find it somewhat hard to engage with you on the same level, right? And this is when you usually win debates, when teams engage with you, but they don't engage with you on the same level of nuance, or just quality of argumentation. Okay, a couple of other things that I want to talk about these type of motions. So basically, the first one is protectionism, and I think here the general way of how you should also interpret protectionism and frame it, depending on which side of the debate you are, is that there is a trade-off always to protectionism. There, and this is how you should interpret and frame and argue for less or more protectionism. Basically, people who are benefiting from protectionism are people who are largely producers and people who are connected to these producers. So if I say, okay, the tariffs are going to increase, or we are going to allow less imports of, I don't know, it can be clothes, it can be cars, it can be whatever people sell and use in their everyday life. People who are going to benefit are people who produce these things domestically, because there's going to be less competition. They can probably ramp up the price if they are, and this is the argument which always is run in defense of protectionism. If they're like infant industries, very new industries that still haven't established themselves, that are having problems in the beginning, they're going to have some time to also establish themselves. So this is the argument for a lot of developing countries using protectionism, because their industries are going to have time to develop, and then by the time that they develop to some extent, they're going to become profitable and productive and whatnot. So this is one side of the trade-off that you are arguing. The other side of the trade-off is people who are using these products, and they might have a lower quality or a lower price if you are not allowing for the international trade to happen, or for some of the domestic companies, if they are not profitable or if they are not cost effective or quality effective, to be just pushed out by the market. So essentially, how you frame the debate from either side or either of the perspective is how you prioritize these two groups. So obviously, if you are for more protectionism, you prioritize what it means that there is more employment in the country, that there is a trickle-off effect in terms of industrial and scientific knowledge, if there are people who are doing these products and who are basically now in a better position. That there is also just general value to balancing out, that you have potential for further exports, and that this balances out your balance sheets with the rest of the world, and this is the primary cause for stability of your finances in general. And on the other hand, if you are arguing for consumers, you can say that the disposable income that people are going to have is probably the biggest motor of your further development, because the more people have money, the more they're going to spend, the more your internal economy is going to benefit from this. So this is one of the benefits of your approach, but also that in a lot of cases, the money which is lost here, and this is the money which goes into relatively inefficient, basically enterprises, which the government indirectly subsidizes in this case, is a money that could have gone into something more productive. So instead of forcing all citizens to subsidize some of these firms that otherwise would not survive, the government would be better if it let citizens spend more money in the way how it seems fit, and let other business and enterprises flourish here. Because if you have to buy a car, but the car is now 10% more expensive because there are big import tariffs, then people are still to some extent probably going to buy a car, because relatively, but cars to some extent are inelastic. If you need to travel to work, you're going to buy a car. So there's just very little ways to go around it. But on the other hand, some of the services sectors, which probably you can frame are the future of these countries in terms of cafes, restaurants, entertainment industry, basically all of the things which countries with a higher level of development have their economy more structured towards. These are the things that you trade off then, right? So your local restaurants or your local cafes or whatever, these are the people who you are taking away income if you are doing the big tariff thing. And this is then the trade-off that you are trying to do in this debate from that perspective, if you are arguing from that side of the house. Okay. And then basically briefly two other things, and we're going to move on to other areas. The first one is investments. And I think you can frame this, especially from one perspective of these debates, as why is it that investments are disproportionately more important to developing countries than they are to developed countries? And again, if you tie this back to the first framing, you can say, if we prove that this is the most important thing in the debate, then whichever side of the motion proves that you're going to have more or less investments is going to win in this debate. This is because there are two parts of the component of what you spend investment on. The first one is these sort of like greenfield things. So you buy things, you create things out of the blue, you do something new. It's just like there's a field somewhere, and then you build a factory, right? There was no machinery, now you bought machinery, now your firm is 200% more effective because people don't have to do everything with hands, but they can do things with the help of machinery. And then on the other hand, there are some things which basically are investments, but they replace things that were either worn out or with time just became obsolete. So, you know, sometimes if you, especially if let's talk about a personal like example for private consumers, you know, you sometimes have to replace windows at your flat or your house, especially if they're wooden and not plastic like nowadays, because they become rotten. And no matter how much you paint them, you still have to replace them. Otherwise, it's very cold or hot in your place. In the same way, if you know the machinery lasts for 20 years, you want to replace the machinery, or you have to because you don't want your workers to get injured, or the machine just breaks down. It doesn't work anymore because it was made to do, I don't know, 100,000 repetitions of something, and then you are at 100,000, it starts to break up. It wasn't just made for this. So the frame for developing countries is that there is very little previous investments that need to be reinvested, right? Because these economies are not at the stage of development where they used to have big investments before, or you know, big investments in terms of, you know, industrial production plants, or also in terms of buildings, or in terms of maybe human capital or whatever. Which means that every investment that comes in is not necessarily, or that happens, is not necessarily just used, you know, to keep the same level of production, but you're just replacing old machinery, or to keep the same family of 5 or 6 living in the same apartment, but you're just replacing windows. But at almost 1-for-1, all of the investments which happens actually increase the standard of living, productivity, and just generally GDP, if you want to talk about in terms of this, for these countries. So from that perspective and from that regard, this is a good framing. And then you can tie it to a lot of arguments which lead to why you're going to have more or less investments on either side of the house, if it happens to be that you can prove why this happens. So, you know, obviously the easiest one is new block investments, because you say you cannot buy this or this, you cannot take part in this part of the economy. The more tricky ones are where you decide for one policy, let's say more protectionist policy, and then you have to explain why people who are from the perspective of thinking between investing in a lot of different countries, they are afraid primarily, and this is another important frame of how investors basically think in these sort of situations. It's not necessarily connected to this argument, but actually it is. So oftentimes the problem with investors is that they are putting a lot of money in one place, and once they are done putting a lot of money in one place, there's basically very little things that they can do. So think about building a plant in a country somewhere, and then, you know, a factory. Whatever you do, this factory is going to stay there. I mean, if you're an airplane company and you invest in planes and you fly to different countries, almost always, if there's a problem or something happens, you just take your plane and you bring it to another country, and your investment is safe. This is not the case with factories or with plans or with things which are tied down to the place where they are. Similar to infrastructure projects. If you build a road, or if you build a port, or if you build anything, railway, it is tied to the place where it is. Similarly to a lot of projects which developing countries are I'm not going to say famous for, but this is a big part of their economy, such as natural resources extraction or things that deal with this. If you build oil rigs in a country somewhere, these things stay in the country. So for investors, a big part of their calculus is, look, the leverage for, to some extent, is from the perspective of the countries where I'm investing. Because once I am done with my investment, they have all of the leverage to, I don't know, tax me more or to make my conditions worse, because they know that I can't really leave the country because I'm stuck there. So from that perspective, everything that brings more confidence or shows a track record of cooperating with international institutions or with international courts or with the country being more aligned to how, usually these investors come from more richer, more developed countries. So everything that is aligned with how these countries practice international trade or international investment is a good positive signal to the investors. And then investors say, okay, the likelihood of my property getting expropriated by these countries here is 70%, but here it is lower. It is 20 or 30% because I see that they are opening themselves and tying more and more their economy to the outside world or to my investment patterns. So there's a lower likelihood that they're going to risk all of this. And this is basically how you then frame and build the argument that, if you showcase less protectionism, or if you show more openness or cooperation, or just like act on this liberal or neoliberal consensus, you are largely going to get more confidence or more investor confidence in that regard. Of course, we are not talking about any sort of country's investor confidence here, because this is also maybe an important distinction. Unlike some of the new investors that have recently become very important in the past 20 years, which is mainly China and the BRI initiatives. Basically, when we talk about Western countries, which are still the countries which hold a lot of capital, have a lot of money to invest, and usually hold a lot of projects all around the world, it's not the state that invests. It is private capital mostly that invests in these sort of cases. But the private capital in these countries is still closely cooperating with the state and gets like nudges or gets ideas or gets signals from the state on which country is probably safer or better to invest. And this is how the whole process is basically connected still in the end. Okay, two other things, guys, and then I think we're gonna jump to questions and start to wrap it up. The first one is corporate policy motions. So corporate policy motions, such as this house would require companies valued at 1 billion or above to trade publicly. This house would weigh shareholder votes in line with the length of time their shares have been held, or this house would oblige all profitable companies to give minimum 50% dividend payout ratio. So I'm just going to post these in the chat as well, so you can Google, because there are some, not Google, but search, because there are some info slides there as well. And it's harder probably to search for this than just typing developing or debt, which is the case with the less groups. So basically, what do we have here? A couple of framings that you guys can use. Probably the biggest and the most important one is that people should be wary of anything that changes for the worse value of publicly traded companies. Now, I want to take a different approach here. I want to first say what the counterframe to this is. The counterframe to this is basically these publicly owned companies. They are rich people who are so rich that they don't even know how much money they have. And basically, we're not caring that much what happens with their wealth, if it decreases, increases, because even if it increases by a huge margin, they're still going to be really rich. And it's not going to affect them that much, because it doesn't make a difference if you have $80 billion or you now have $20 billion. So this is the counter frame. The real frame, the objective frame, is that most of the big companies that are owned publicly, like the S&P 500, NASDAQ, or different national indexes that exist for your countries as well, most of the capital there, either directly in terms of, okay, I am a shareholder directly, more so indirectly in terms of pension funds, in terms of investment funds, in terms of people investing, or in terms of their savings being there, or in terms of their retirement funds preparing themselves for retirement, also being there, are actually the biggest owners of these large firms. So if a firm's value decreases from 100 to an 80, sure, the rich guy loses 20, but it is also all of the average guys. So, grandparents and grandmothers, that they lose a huge part of their retirement savings fund, or it is people who are looking forward to to saving to pay their kids college, or to give them a good start in life, or it is people who are saving to open up firms, or to just have some sort of capital to maybe retire early, or to build a house, or just do something better with their life, which are also losing a huge amount of money. So this is a way to show that we should be wary of big changes to the process, because big changes to the process oftentimes have a consequence of changing the value and the whole aspect of how these companies are functioning. So, for example, if you would oblige all profitable companies to give minimum 50% dividend payout ratio, if this is going to decrease the value of these companies significantly, because people are going to say, look, in a lot of cases, it pays off more for our ownership of this company not to pay ourselves 50% right now, but to reinvest, or to maybe buy off some stock, or to do a different decision. And we know best what is the value, what is best for our company, not the state necessarily. If the value drops dramatically, you can always claim this as a big impact on your side of house. Similarly, for example, if you weigh shareholders' votes in line with the length of time their shares have been held, and then people say, but this incentivizes any sort of buying or selling of stock. Because if you buy or sell recently, you are in a bad position, and this is going to decrease the amount of transactions. Decreasing the amount of transaction is going to lower the value significantly, because these markets are going to become less liquid. You're not going to be able to, and this is one of the benefits of stocks, that they are fairly liquid. You can sell and buy them very efficiently at almost instantaneously. If you tell your broker, or if you want to go out of a certain stock, you can do so. Unlike, for example, owning a house. If you own a house, you first have to find a buyer, and then they come, and then they don't necessarily like the house. They think that the neighbors are awful, and they don't want to buy the house. And then you find another person, and then you always kind of negotiate over the price, and they're asking you for discounts, blah blah. The whole process is, and then sometimes there are people who just don't need a house because the market is down at that time. So these are not very liquid things, as opposed to stocks, which are very liquid things. So if you're messing with the liquidity of stocks, if you're making them less liquid, less easy to sell, and the market generally smaller and smaller, or slower, I should say, this decreases the value. And then the value decrease, we've already explained on how this usually is a bad thing. Briefly, two other things here. First of all, you can always argue and frame this idea from the perspective of ownership rights, right? So oftentimes people do not necessarily perceive companies as ownership by somebody because of the corporate structure, because this is so dispersed. So I think, first of all, what you need to do is you need to argue on the basis of intuitiveness. So when you walk into your local cafe and you drink coffee or tea or whatever you drink, beer there, and it's owned by your neighbor, you of course know that this is your neighbor's ownership, and you know that they make money out of this, they make all of the decisions, but they're also responsible. If they make a mistake, or if they are rude to customers, bye-bye. You're going to lose money. You're not going to have a cafe anymore because people are not going to come. Similarly to your small local stores, you know the person who sells this, you probably trust them, you have some sort of relation, all of these local things which are close to you, you recognize that this is an ownership of someone and that someone is trying to make a living with their ownership. On the other hand, when we are talking about companies which have thousands of owners, it's very difficult to say, oh, but this is a, 0.1% of ownership of someone. So we usually think, or the framing from the other side is going to say, but yeah, but this is relative. So I think what you can do, especially if you are opposing some of these changes, you can always assert the framing which says that, from the perspective of owners, the owners should have the ability and the owners should know what is best for their company. So for example, if you would require companies valued at 1 billion or above to trade publicly, there are 1,000 reasons why the owners might not want to be traded publicly and why they want to keep the company private. Maybe this is going to increase the chance of them of revealing their financial situation to the opposition, to the competition, sorry. This is something they don't want. Maybe they're dealing in very secretive stuff, I shall say. So maybe they're producing arms or doing research for the military, and any sort of, again, public display of their figures or their funds or accounting results is going to signal in some way to the people to whom it should not signal some things about the company. So generally, the framing and the argument here is that you should prioritize the owner's wishes and assume that they have the best interest of the company at hand, whether in the decision to go public or whether in the decision to pay a minimum of 50% dividend payout ratio. And in framing, what is then the burden that you ask from the other side? It is to show that either this is not the case, or to prioritize the idea that after some level, and this level is you're not doing anything illegal, or you have paid your dues and taxes to the state, we generally in status quo prioritize letting people decide how they're going to spend their income and how they are going to manage their property, because this is according to our interest that all people are individual, they have different individual needs, but they also have most knowledge about what to do. Your local cafe owner or your local store owner, of course, knows its clientele best. And if the state says no, every cafe now needs to serve these expensive beers, of course, he's going to get harmed if his neighborhood is of people who buy medium or cheap beers. And in the same, on this trivial example, of course, in the same level, we also prioritize, and this is a part of this framing, we also prioritize bigger and complex institutions which still have their own mechanisms of ensuring doing the best for the owners. So owners get together in assemblies, they choose people who are running the company and who are managing it, and they respond and pay their pay the bills and are accountable to these owners in these assemblies. And in the end, if there's not a good reason for why we should change that, we should revert to this, right? So again, you're pushing the burden on the other side here, and this is very effective in actually increasing your chances of running a good case or being successful in debate. And one last group of debates. So I'm again posting some of these motions here. You can also take a look at them for those who joined. There's a Google Sheet document in the chat with some of the recently set economic motions. So you can look there. Some of these motions again have an info slide, so you can take a look at this. But yeah, just do it as you have time and as you see fit. But basically, the most important point of framing, I call these motions commodification. So they are basically asking for something which wasn't a market before to now become a market. So if before it was not the case that you could transfer skills between individuals, now it is the case, and we would allow selling and buying of skills. For example, people skills, artistic skills, athletic skills. There's other examples between people, or this house would allow people to sign income share agreements, meaning that I get some money in the beginning, and then when I from investors, and then when I start actually making money after I finish college or I get a job, I have to pay a certain amount back to the same investors. And then lastly, this house would legalize and actively incentivize the use of university bonds. So very similar, investors finance students, and then they get a period of their income in the future. So what is the most important framing question in these type of debates? It's creating the market. Basically, there is no market in status quo. So your success or failure in these debates, whichever side you are talking from, is going to depend on how you create the market. Now, obviously, there are different reasons to how you can do this. You can make it intuitive. You can connect it to current markets. You can analyze the incentives of different actors and show why it's likely to be something. But this is the first thing you should be talking about in prep or thinking about when you get similar motion. So, for example, when you are talking about the idea of this house would allow the selling and buying of skills. If you are opposition in this motion, obviously what you are going to and how you are going to characterize the market is, look, there's only a handful of people who are really rich and who can afford these things. There's much more people who are, I don't know, living under $2 a day or who live in very big poverty. This means that the prices for these things is going to be incredibly low. And some people are going to get rid of their huge talent for something like $10 or maybe $100, which is for them going to be 2 months of income. So for them it's going to be big, but for people who are going to buy this, it is going to be very small. On the other hand, how do you frame this from government? Is the idea of, but look, there's also going to be big competition for people who are going to buy this. Usually there are going to be different proxies that are going to also want to increase the price so that they make more money in terms of like markups and provisions for connecting the buyer to the seller. At some point, people who have very little, people who have a lot of money are willing to pay a lot of money for the additional benefit to their skills once they have used it in all different ways. Maybe try to take, I don't know, artistic classes or whatever, and it's not working, but now they can just buy a part of the skill from someone who is not skilled. They are willing to pay a lot of money, so they're not going to be completely rational and say, oh, the supply is big for this, so I'm going to wait until I buy this for I don't know, $4 or something. So you guys see the gist of it. You're basically arguing of who is going to be likely to buy these things, who is going to be likely to sell these things, and then you're tilting the balance of the debate towards it's going to be an exploitative market or it's going to be a very efficient market, right? And this is where you are at the beginning of the debate, straightforward, very much framing and tilting the debate in your favor. So, for example, similar with the idea of university bonds and the income share agreements. So if you are opposition, you can say, look, these already happen through banks. You can get a loan from the bank, or in some cases, in most cases, you can get a loan from the government, which means that the people who are going to be getting this are people to whom you can be extremely sharkish because they know that they have no option other than to get your loan. This is why the interests here are going to be huge, or this is why the subsequent income that you're going to receive is going to be hugely taken away by the people who you're going to have to return the debt to. So this is, for example, the framing from opposition, which leads us to believe that this is going to be a very how do you say, sharkish, exploitative market. From government, what you could say is, look, I mean, these people. So you're flipping things a little bit. So you're saying these people have the opportunity to maybe go to a bank or to go to a government, or they have the opportunity to not go to college in these sort of ways. So probably for them, they are more rational than just people who are going to get trapped in these sort of things. Also, it is likely that these are going to be very comparative cases. So, there's going to be thousands and thousands of examples of people like this, which means that very often market gets very standardized in these ways. So you cannot, individually screw up someone when there's hundreds and thousands of people who are having the same conditions as them. You study philosophy, economics, or I don't know, maths for 4 or 5 years. We are going to give you this amount of money, and then you are going to give us 20% of your income for the next 10, 15, 20 years, blah, blah. So the standardization and the massiveness of the amount of people that are going to be taking this acts as a way of ensuring that people are not going to be systematically or individually, how do you say, very much screwed by this and by unfavorable conditions. So, there are 5 other ways in which you can argue why a market is going to be exploitative, or why it's going to be very efficient and very beneficial for both sides, blah, blah, blah. I think you can also come up with these based on your experiences and what you already know about Econ and how to argue these things. But the gist of it is to think about this and assert this as the primary method by which you can then construct other impacts and analysis. And oftentimes, how this ends up being is that people realize that they want to run this, but they don't start with constructing the market or painting the picture how this is going to work. They just at one point say, oh, by the way, people are going to be screwed by this, and companies are going to make a lot of money on them, and they're going to be in bad conditions, right? But when something new is happening, when it hasn't been done before, you need to explain how it's going to work. And also you have all of the incentive and all of the willingness to explain how this is going to work in a good or in a bad way, depending on which side of the house you defend. So you only need to remember about this and think about this in prep, and kind of prioritize this. And then I think you're gonna find yourself that it is very much easier to then create arguments from this, or have rebuttal, or just have like a higher level of confidence that your world is correct, which is oftentimes the differentiation point between teams and speakers in debates. Okay, some of the other things that we don't kind of have time for now, but you can take a look at the motion sheet and you'll see that these types of motions are recurring. So if you want to practice economic debates, or if you want to see what's trendy now, what you can expect. So obviously there are motions about free trade and ideology. So these are the motions which either support free trade or not, or support economic liberalism, or oppose the economic integration between countries. Some of this we already talked about in the workshop, but there are plenty of workshops online where you can also take a look at this. And then other than this, the recent trend is to include a lot of motions. Yeah, I'll send the link again, just 1 second. Yeah, sorry, got a request to send again. Okay, thank you. And basically, some of the other ones are, crises and how these affect companies or economics, and what should be done in times of crisis. Should you, for example, relax some of the working conditions, or how should the government ask? Then obviously there are the antitrust motions. There are the antitrust motions where whether the government should break up different, input X, Google, or rather Alphabet, Facebook, blah, blah, blah. There are also motions about housing. So either rent control, or, sometimes, actually one of the motions that was very, very much set was the one, I don't know if you all know it, the one where you would remove all sort of restrictions, zoning restrictions, etc., in places which have high rent, so that people can build more, houses and flats in these sort of situations. And the two other kind of like types of motions are the intellectual property. So basically, always, should we have intellectual property for sometimes medicine, but just like in general, or not? And then lastly, taxation. So should you have, and what types of taxes, should they be introduced, increased, lowered, whatever. So these are the other groups for you to think of, but I'm pretty confident that the ones we talked about today are the most commonly set motions, right? So obviously it makes more sense. Like we've covered out of the I think 90 motions, we've covered at least 1/3 with this workshop of the common things and framings. So yeah, okay. So I think I'm done with the lecture example part where I talk more. So I think we have around 20 minutes probably for your questions if you guys have them. So I'd like to open the floor for that. Don't be shy if you are curious about something or you just want to discuss something. You can also type it.
I have a question about the trade-off point for the protectionism versus like free trade thing. So for the whole thing of like more efficient goods and like cheaper stuff that like people in that country can buy and therefore put more money into the economy, what is the response to the opposing team coming out and being like, with these private companies that will like are generally like multinationals, why is it that they keep that money in those economies and don't just like funnel it abroad to like further their own production or their own success and like internationally? As like, why do they keep it in those countries?
Oh, yeah, so that's a good point. I would largely say to some extent they don't. So it's just the added benefit is that the citizens of your country are paying less for a better service or for a better product. In the end, these companies are going to pay some sort of taxes to your state. They're going to pay workers working in your state. Even, for example, even if you take the worst case scenario, and this is like a car just get imported, there's a person who's going to be the representative to sell this car to someone in your country. So this is the person who is going to get paid. But also, usually, in a lot of these cases, there is some sort of also transfer of skills or just a transfer of practices. Whether it's in terms of the benefits of the product penetrating the market, is that it now standardizes the market, which means that your domestic producers also do X, and this is beneficial for your folks. But also there's a trade-off between, and as I said before, this is why you need to frame it that otherwise these people would be spending the money in a different way. Because think about it this way, it is not clear that everything that you produce and that is a final product is actually the product of only your country. So think about it in this way. It could be the case that you are producing cars, but that you are importing tires, or that you are importing, let's say, engines from somewhere outside, and then you are just assembling it here. And then, the intermediary products, which are put into your product, are obviously foreign. So this can be a case with a lot of manufacturing, and oftentimes is the case. Oftentimes you need to buy some sort of also metal, which is like raw resources, because there isn't just enough in your countries. So if you compare the idea of subsidizing and keeping this sort of production versus the idea of services, it is almost certain that services actually put the money more into your economy. Because in service sectors, if we are talking about hospitality, let's say, or tourism, or food, or drinks, you also, I don't know, buy coffee from the outside because coffee doesn't grow here, or maybe some sort of food. But usually all of this is mostly produced locally, and you spend most on wages of workers who can be living in another country, unless you are a very small country and then people migrate for daily work. So the trade-off is, because people are going to be spending or be able to spend a higher percent of their income on services, even though that the big companies might extrapolate the income back to their origins of place for the things that are not tariffed right now, this difference in the disposable income is largely then thrown back into the circle of your own economy. So even on that metric, we can compete, and it's probably better in the long term. So this is how I would weigh these points. What else do we have in the chat? What's an efficient way of case filing for Econ? I'm not sure. I can share with you some of the resources. So these are some of the resources. The first three, so Why Nations Fail, Factfulness, and Economics in One Lesson, are books, and then the latter ones are movies, which are good intro to economics and to some extent explain something. And of course, here is the king resource, The Economist. Not because it's The Economist, but because it really is probably the best resource for economics, because it's very wide. There are different offices everywhere. They oftentimes they always have a section on the developing world, let's say, or on China, but also cover US and EU. So very versatile, and I would say very objective. Not always objective. Sometimes clearly stands on one side of the issue, but just very interesting in what ways and in what cases they find economic rules or economic effects. And I think for debating, and this responds to the idea of case filing, it's very important to be creative. Think about things in terms of examples, in terms of just like knowing stuff that when you tell in a speech as an example or as framing or as whatever, the other side goes, well, this is really smart. I never thought about this. I'm going to listen to them right now and, like, see if they come up with more stuff in their speech. So I think this is the best way of approaching this. So just read the articles. They are paywalled, but you can download PDF. This is what I did and still do. You can look at YouTube videos. These are not paywalled, and this is I think the best way of case filing for Econ. So just like generally reading things, getting the grasp of what is happening, and extrapolating trends. The purpose of this workshop was that you have a trend, right, for what to do in certain occasions. And this is something which I think is useful, especially in Econ motions, because arguments and things you mostly know, or you can pick up by listening to other people, by listening to debates. Oftentimes the best way is you lose a debate and you see, oh my God, this was a good argument. I'm going to use it the next time. And then you get the stock of these arguments and you already know what you're going to run. But framing is something which is hard to acquire because it requires more moving parts, and it's kind of like a second and third row of impacts that you also take into account. So if this happens, what then happens? What then happens? And then you have like a totality of the framing. So this is why I want to, in the end, focus the workshop on this. But anyhow, these are the good resources that I think you guys can use for case filing. Okay, Ali, I had a question. Okay, I get it. But here's the thing: if I was open this debate, and then you tell me and you frame this debate as student debt is very unsustainable, why would anyone give you capital that is very sustainable then? This is something which I would frame as opposition. So basically, if you're telling me that student debt is something which has huge interest rates, most people can't access, and is very bad towards the students, I would say, well, obviously, people who are going to be putting the capital in the university bonds as well are going to know that this is the case, and are going to know that even the marginal increase compared to student loans is going to bring them a lot of people. So there is no reason for them to be that much 40-50% better than the student loan market once they can be 5 or 10% better than the student loan market. And then I would say, on a comparative, student loans are also highly regulated by the government to ensure that there's no like funky business. Although they have, they are huge debts, there's still no funky business. So it's very bad for you in terms of sustainability, and it takes a lot of your money but you are clear on how much money it takes, and it cannot change, blah blah. So I would say that the difference between that is also going to be something which is going to incentivize probably university bonds to be more exploitative, or changing conditions, or having these little small letters in them compared to the university bonds. So basically, I would flip what you said. So you say, look, there's one thing which is really bad, let's have another thing, and then the market gets better. I say, because this one thing is really bad, and that's the only alternative to the other thing, this other thing is going to be bad, but here are some of the other things in which it is going to be worse. But yeah, good question. I think, as I said, most of these things are up for debate. There's no right or wrong answer. It's just how you manage to frame it and what you think are going to be the most important things. Sorry, did you want to say something?
Yeah, but okay, okay, you give me, I will say. I just want to ask Laura, sometimes as an econ student, when there is some argumentation in an econ, but it's out of the real logic, like it's a good argumentation, but it's out of the real context in the world. And okay, like in mechanism is flaws or stuff like that, but you see as a person who knows something, like it's too much stands out in your eyes, like it's a little bit out of logic. What do you do in that situations as an adjuster?
Yeah, so in these situations, I think the best like line to go is to call this out. But so the goal is how you call this out. You cannot just say, oh, opposition is very unrealistic, this doesn't happen in the real world, because obviously this is what people say all of the time. Even when the opposition is the most realistic team ever, you're going to say they are not realistic because you want to win and you want to frame the debate as better for your side. So how I go about in doing this is, first of all, have a couple of examples or intuitive things ready to showcase why this is something which is not realistic. So for example, my favorite way of doing this is when teams characterize corporations as the most evil of all times, and always just wanting to hurt people or whatever. And then I say, look, guys, intuitively, just like 60 or 70% of people in countries with high or middle income are working in these things. Do you think all of them are just like really bad people? Do you think all of them don't have any incentives to actually just do a good job? And this is the power of corporations, that they are very efficient, that they have efficient structures of managing a huge amount of people, that there are very smart people there who come up with inventive ideas. And maybe this is the reason why they're prevalent, and not because they are always inherently exploitative and using all of the people. So I think you need to intuitively show to the panel and to the rest of the people that what they are saying is unrealistic. And then to this you add a little bit of rhetorics. So you say how this is ridiculous, how this framing is not realistic. You are a little bit sarcastic, of course, in a good manner. And this should be enough for you to win the framing war in that respect. If they are really something which is not reasonable, pointing out to the facts where they aren't reasonable. Also, doing the reasonable scenario is oftentimes important. So you shouldn't just say they are not reasonable. You should set what is reasonable, because we are humans and we are oftentimes acting on comparisons. This is in the end what debate is about. So if on one hand you have the unrealistic comparison, you can only, especially if you don't know a lot about motion, sometimes this happens, you can only find this unrealistic if you know what the realistic comparative is. And the realistic comparative might lie in your head, but you also need to tell it to the panel, tell it to the rest of the debate, so that the panel can be like, oh yeah, I definitely trust OG more because this thing from OO seems less realistic, right? So these would be ways in which how you can do this. Okay, I think we have two questions from I think Fatma Gul and Janagat. So I think we're gonna try and answer these, and then the rest ones can go into another session, or you can send me a message, or through the convening team. Or best would actually be that you come to the tournament and you get to ask the good judges that we're going to have on Econ Motions to answer this. But yeah, let's go with these ones. So the question about as an adjudicator, there are times when you hear arguments from both sides in an econ team motion, which are logically correct. What should be our metric to weigh arguments in such a scenario? Very true. Almost always econ motions are very characteristic of having a lot of arguments on both sides. And as an adjudicator, you are lucky when there's a team that does the weighing or the comparison for you. If that doesn't happen, and I shall say that in the majority of cases it doesn't happen, then the approach that we can take in this sort of scenarios is to see where these arguments clash, and then usually you're going to intervene in the idea of what is the most probable scenario and how have teams argued and mechanized their cases, so I know that they are the most probable scenario. So I'm going to use the example which we talked about a lot before, and this is whether the market is going to be exploitative or not in the cases of student bonds. So if there are reasons for you to believe that from opposition, it's more likely that it's going to be exploitative, but this was not weighted, or just like the opposition was trying to paint a world where this is the case, and then government was trying to paint a world where, you know, if this was better than student loans, then people would have more money, they would have more income, more people would go to university, and then you know, they didn't compare necessarily these two worlds. Then you can say, look, if there were really mechanisms why this was more likely from opposition, you can say, look, both of these arguments are true if they happen, but on a probability way, I trust opening opposition more that this is what the realistic scenario would be. Similarly to some of the arguments we talked about before, and these are, if you're gonna, so for example, developing the infant industry versus helping out the local economy, or just providing people with a more disposable income. Both of these are good. You ideally would want your country to have both an industry and people who have a lot of money and who can spend them. So how does this clash? It is, first of all, what we talked about in the beginning, the framing of the debate. So whether teams have or have not said what is the priority of these, for example, countries. So this is where you can revert to, but also the plausibility of these arguments happening. So, you know, if I go with one side of the motion, which side has proven better that realistically their thing is going to happen? And then thirdly, probably teams have done some impacting. If they haven't, that's their problem. They should be to some extent penalized for this. But in a lot of cases, the impacting also matters outside of just the probability and the mechanization. And then you can clash these arguments here and say, look, it is clear or intuitive from my perspective that the impact of this argument is this and this. This is a bigger impact probably than the impact from the other side. They don't weigh this impact. And then usually in that scenario, teams are going to listen to you and say, okay, we really should have weighed that, and you were correct in weighing that for us. And then the last question for Fatmagul. I want to ask general question: how can you survive from mixed room cultural differences in euros or worlds? Well, I don't know. My experience is that in a lot of times you can actually be helped by that. So a lot of times in euros or worlds, I noticed that the primary context of the round is the context where people who are from Western states in European Union, or from North America, or from Australia, New Zealand, so people who are very developed in terms of economies, this is most often the context that is debated. And for various reasons, because of news, because this is where the majority of economic power used to come, but still comes from blah 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 blah. So my approach, or the approach of my teammate and I and other people who I debate with oftentimes, is just to explain to people that a huge part of the world or the other countries just focuses on different issues and has different economies, right? That, you know, maybe the biggest question in these countries is how we're going to redistribute income. But the biggest question in my country is not how we're going to redistribute income, because we're already doing too much of it. The biggest question is, you know, how we're going to get the government to distribute less, because this causes too big of a taxes and too big of an income of government on the state and blah blah blah. So I think the way forward to surviving, as you framed it, cultural differences, is to frame your cultural differences in a way that they are the most important thing in the debate, probably. Now, do not, the key or the goal to this is people shouldn't overuse it. They shouldn't make every debate about the country they are from and then say, look, you haven't talked about this. But I think in strategic instances where this is the problem, and these are going to have different framing based on cultural differences and where they grew up for, and what are the problems in their countries, what are the economic context, this can be a useful way of you actually using the context that you know and showing to the panel, the framing in opening was completely off. This is what this debate this is what this debate actually is about. Okay, folks, I think these were all of the questions. As I said before, if you have any additional ones, just ping me, or if you want to follow up on all of this. From my side, thank you very much for tuning in and listening. I hope to see you all at the real tournament. And that's it. That's it.
Thanks for making this workshop possible, Lovro, and for your say for our tournament. I hope everyone to see in our tournament. Have a nice day. Bye.
Bye, folks. Thank you.
Before you leave, may I ask something?